Hello everyone and welcome to our next step. I'm Irina Ushkova. I'm your nonprofit auditor. In the previous episode, we discussed a conflict of interest policy and how it helps the organization identify and properly address situations where the personal conflict of interest may exist and how the organization need to address the decision-making process. Today we're moving to another important nonprofit governance policy, whistleblower complaint reporting policy. The basic idea behind that policy is relatively simple. If somebody working within nonprofit becomes aware of something illegal, unethical, fraudulent, or inconsistent with organization policy, that person should have a way to raise a concern without being afraid of potential retaliation. In a best practice, there is more than simply telling employees if you see something, tell something. The organization needs to establish the process where the concerns should be reported, who receives them, and how they are handled. And they need to make sure that the person who provides the complaint is free from retaliations. And let's start what means whistleblower policy. In the previous snaps, we discussed that policy means sets of rules. The IRS described a whistleblower policy as one that encouraging staff, volunteers, to come forward with the credible information about illegal practices, violations of the organization's adopted policies. It should also identify who can receive those reports and provide complaints against retaliation. So from that definition, we can see that the IRS establishes at least three main components that policy needs to include. There has to establish a way that complaints should be reported. There needs to be designated person, someone responsible for receiving complaints and addressing it, and there has to be protections against retaliation. Let's look at a practical example. Suppose an employee notices that supervisor has been using organizational credit card for what appears to be a personal purchases. Employee is uncomfortable about overall finding, but the supervisor is also a person who approves the employee's timesheets and performs evaluations for the employee performance. What employee is supposed to do? Telling the employee to report the concerns to the supervisor obviously will not work. Or imagine the concerns involved executive director. If the policy simply says all complaints should be reported to executive director, the organization has created reporting process that does not work when complaint involve the person who is receiving it, executive director. That's why a good whistleblower policy should provide an appropriate reporting structure. Depending on the size and structure of nonprofit, employee may be able to report concern to supervisor, executive director, human resource representative, board chair or designated board member, audit committee, or another individual that nonprofit can designate. Some larger nonprofit organizations may also use outside hotline or third-party reporting services. There does not need to be one universal system that works for every nonprofit, but there should be somewhere for the concern to go, including alternative when the concern involved typically higher management or even a board member. And the people expected to use the policy need to know how the process works. A policy hidden in employee handbook that nobody read and not particularly useful for an employees that actually need to report something. Now, what kind of issues are to be reported? A whistleblower policy is not intended to turn every workplace disagreement into formal investigation. That would be overuse. Someone being unhappy with the supervisor management style is not necessarily his whistleblower matter. Neither every disagreement about the organization, that's also not reportable matter. The policy is generally intended for more serious concern involved in possible illegal activity, fraud, misuse of organization resources, financial irregularities, violations of organization policy, and other significant misconduct. For example, an employee may believe the grant funds are intended not being used for the purpose that permitted by a grant. Someone may discover that financial information has been deliberately altered. An employee may see another employee stealing organizational property, money or otherwise. Someone may become aware that information provided to a government agency or funder is intentionally false. Those are kind of concern for which organizations should have a clear reporting mechanism. But once a complaint is received, there is another important question begins. What happens next? A good policy should establish responsibility for reviewing complaint and determining how it should be addressed. That does not mean every complaint automatically becomes a major investigation. The organization first needs to understand what was reported, whether the allegation is credible, whether additional information is needed, and who is reportable and appropriate to handle the matter. And independence becomes an important issue here. People who involved in a potential dispute should not be parties who investigate it. Suppose an employee reports suspected financial misconduct by chief financial officer. It probably should not make sense for the chief financial officer to be responsible for investigation. If the allegation involved senior management, the matter might not need to go to the board or appropriate board committee. Or if the board member is not involved, it may be appropriate go to the board. It is involved, if the complaint involved a board member, the organization may need a different approach again. And depending on the seriousness of the nature of allegation, legal counsel or another outside professional may need to be involved. The policy does not need to anticipate every possible situation, but it should establish a framework that serious complaint does not arrive and leave everyone wondering what should we do. So there has to be a ways and the process that every employee, board member, a volunteer follow in case if such complaint will arise. Another important issue is confidentiality. In my opinion, it's one of the most important concern of every policy. Why? Because people feel more comfortable report something if they know they're going to be confidentiality and they will be protected. People are much less likely to report concern if they believe their complaint will immediately become a common knowledge throughout the organization. So the organization should handle reports as confidentially as reasonably possible. There needs to be understanding there cannot be complete confidentiality because there's going to be some disclosure. And we have to use word confidential carefully. It may not always be possible to promise to complete confidentiality to people. If allegation needs to be investigated, information may need to be shared with other people within the organization. In some circumstances, information may need to be provided to legal counsel, law enforcement, regulators, and other appropriate parties. So the objective should not be limit disclosure appropriately rather than make an absolute promise that nobody will ever learn about that complaint. Some organizations also provide a way to report concern anonymously. That can be particularly useful when employees are afraid that identifying themselves will affect their employment or their relationship within the organization. But anonymous complaint can also be more difficult to investigate because there may be no way to ask a person who made a report for additional information. The organization therefore needs a reasonable system for handling both identified and anonymous reports when anonymous reporting is available. Now we come to perhaps the most important protection in the policy. It's retaliation. An employee should not be punished simply because the employee raised a legitimate concern in good faith. Retaliation can take many different forms. It may be in the form of termination or demotion. But it could also involve reducing someone's hours, excluding person from responsibilities, threatening the employees, changing working schedules, conditions, or otherwise penalizing someone because a concern was reported. The IRS specifically identifies protections against retaliation as one of the elements of the whistleblower policy. Federal law also provides certain protections against retaliation for reporting federal offenses. State law may also provide additional protections. That protections is essential because a reporting system does not accomplish much if employees believe that using it will cost them job. In the same time, protections against retaliation does not mean that every allegation has to turn out to be correct. Someone may raise the concern in good faith, the organization may investigate it, and ultimately, the allegation may not be substantiated. Absolutely possible. That does not necessarily mean that employee did something wrong by raising the concern. There is a difference between making a good faith report that turned out to be incorrect and knowingly making a false accusation. A well-designed policy should recognize that important distinction. Documentation is also important. When a significant complaint is received, the organization should maintain an appropriate records of what was reported, how it was evaluated, what actions were taken, and how matter was resolved. That documentation becomes especially important if any questions arises later about whether the management or the board knew that the problem existed and how it was addressed. From the auditor standpoint, whistleblower complaints can also be relevant for the audit. Auditors consider fraud risk and obtain information about possible or suspected fraud as a part of the audit process in every audit. If significant allegations involved financial reporting, misuse of assets, management override of control, and other financial misconduct has been raised, those matters may be relevant for the auditor work. This does not mean that the auditor operates the organization's whistleblower process or investigates every complaint, the organization remains responsible for its own governance and response to the complaints. But significant allegations involved financial matters may not be simply disappear into file because someone believes it's already handled internally. There is also Form 990 connection. Part 6 of Form 990 asks whether the organization has a written whistleblower policy as the end of the tax year. The IRS describes the policy as encouraging staff and volunteers to report credible information about illegal practices or violation of organization policy, protecting them from retaliation, identifying people to whom reports can be made. As we discussed in the previous episodes, there is one of the governance policies in the Form 990. The IRS generally does not say every policy needs to be listed in the Part 6. Instead, these questions provide information about the organization governance practices and policies and can be used in assessing tax compliance risk. So again, the point should not be to adopt the policy, in this case whistleblower policy, simply because there's a question on the Form 990. The policy should exist because the organization wants a credible way for people to report serious concerns and want a framework, rules, for responding to those concerns that were raised. And once the policy exists, the organization needs to make sure it actually works. Does the employee volunteers know where to report concern? I was a volunteer in a nonprofit organization and I was not aware how to raise a concern. If there is alternative, if complaint involved an executive director or another person who normally receive complaint, who determine whether complaint require investigation, how confidentiality handled, how the organization protecting people from retaliation, and if significant complaint has been received, is there documentation show that the organization complete the investigation and recorded the final results. Those are practical questions behind every policy. So before we finish today, let's summarize. A whistleblower and complaint reporting policy gives employees, volunteers, and others an established way to raise serious concern about possible misconduct. The policy should identify where concerns can be reported, provide appropriate alternative reporting channels, establish responsibility for reporting the complaints, address confidentiality, protects individuals who make good faith report from retaliation. And perhaps most importantly, the organization needs to respond when somebody actually uses the policy. Having a reporting mechanism does not simply explain complaints that needs to be ignored or automatically dismissed. The purpose of the policy is to create the process in which legitimate concern can be raised and appropriately addressed. In the next episode, we will move to another policy, which is document retention and distraction policy. We will discuss what type of records organization need to maintain, how long records needs to be kept, how electronic records fit into policy, and why the organization also need to know when documents should be destroyed. Thank you so much for being here with me. Have a wonderful day, and thank you for being here. Be safe.